Do you know the difference between base metals and precious metals, and why it's important to traders and investors? Well, you're about to. My name is MetaMatt, Director of Education over at PB Stock Alerts, and welcome to Class 39 of PB Trading University Lite. So first, let's talk about base metals. These are common metals that are widely used in various industrial applications such as copper, aluminum, zinc, nickel, lead, and tin. Base metals are often used in the production of infrastructure such as buildings, power supplies, and roads, as well as machinery and everyday items. Investors can use infrastructure spending and construction projects as one of the indicators for the performance of base metals. As economies grow and construction activities increase, the demand for base metals that are crucial in the construction and manufacturing industries like copper, aluminum, and zinc tends to rise. This is due to supply and demand. When there is more demand for these base metals due to construction increases, then the price is likely to increase. This is important to both commodity and stock traders alike. Of course, commodity traders can trade these metals in the spot or futures market or with options contracts. Stock traders can use this information when it comes to due diligence of certain companies that could be affected by base metal supply and demand. Tesla relies on some of these base metals such as nickel for the production of their electric vehicles. Caterpillar Inc., ticker CAT, is a company that manufactures construction and mining equipment. Its stocks can be impacted by trends in the mining industry, including demands for base metals. There are tons of other companies that are traded on the stock exchange that could be affected by base metals. Next up is precious metals. Base metals are more abundant in the Earth's crust and have less economic value than precious metals. Gold, silver, platinum, and palladium are all examples of precious metals. They typically possess desirable properties such as being corrosion resistant, having a high melting point, and being able to be deformed, bent, stretched, and hammered without breaking, shattering, or losing toughness. They are used in jewelry, electronics, catalytic converters, and other high-tech applications. Investors often use them as a store of value or hedge against factors like inflation. Precious metals are looked upon as a safe haven investment due to having historically retained their purchasing power over time. Let's talk about that. First of all, precious metals often have an inverse relationship with the US dollar. This is partially due to precious metals being priced in US dollars. When the dollar weakens, precious metals become relatively less expensive for investors using other currencies, potentially increasing the demand and in turn price. However, that's not the only reason why precious metals prices might rise. Precious metals are tangible assets with uses in jewelry, electronics, and industrial applications. This gives them intrinsic value, which provides a foundation of their worth. Basically, this means they have value because they are useful. When the value of currency goes down, people might start putting their money into precious metals because of this, seeing as paper currency can only be used to start a fire if its value goes to zero, whereas gold has other purposes that gives it value. There's also a limited supply of precious metals compared to other commodities. Because of this, when governments print more money and inflation lessens the purchasing power of currency, the scarcity of precious metals can make them a sought-after store of value. There is also historical significance to keep in mind. Throughout history, gold and silver have been recognized as a store of value across various cultures, civilizations, and time periods. Movies depicting ancient times don't have the US dollar floating around, but there is still gold. Currency like cryptocurrency don't have ancient roots as gold, which makes it more volatile and less reliable as a long-term investment than gold. However, the price fluctuation and speculations makes it perfect for traders, as well as investors with high conviction in the technology. Not every currency is accepted across the globe. You can't go to Canada and use Mexican or US dollars. You can't use euros in America. However, gold is also accepted currently across the globe and can be easily traded or converted into currency worldwide. This contributes to its perception as a reliable store of wealth, especially during times of economic uncertainty and currency devaluation. Speaking of which, during times of financial crisis or political instability, precious metals can be perceived as more stable compared to commodities like oil that rely on peace and trade between countries, or stocks and other assets that rely on economic growth and are susceptible to fluctuations of financial markets. There is also an inverse relationship between interest rates and precious metal prices. Unlike interest-bearing assets such as bonds or dividend-paying stocks, precious metals don't generate income. When interest rates are low, or when inflation is rising, the opportunity cost of holding assets that generate little or no yield is reduced, making precious metals more attractive. Opportunity cost being the loss of potential gain from other alternatives when one alternative is chosen, in this case precious metals over interest-bearing assets. When trading precious metals, it's important to keep track of monetary policies. Policies implemented by central banks, such as quantitative easing or changes in interest rates, as we just went over, can impact precious metal prices. For example, accommodative monetary policies may contribute to higher precious metal prices. Changes in mining production supply levels can also influence precious metal prices. Supply disruptions or increases in production costs may impact the availability of these metals in the market. It's also important to note that while gold and silver are often driven by investment and safe haven demand, platinum and palladium are used in industrial applications, particularly in the automotive industry for catalytic converters. Therefore, factors affecting industrial demand such as changes in automotive production can influence those metals. I hope this class helped. If you are interested in learning more, be sure to check out our free trading Discord. We have over 100 free trading classes, live streams, and alerts. I hope to see you next class, but until then, I hope that you all make some bread.